Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we began a new module on trading on margin with a look at exactly what trading on margin is. In today's lesson we're going to continue our discussion of margin with a look at some of the rules and regulations surrounding trading on margin. So let's get started.
Because the stock market is an exchange-traded market, many of the rules and regulations surrounding trading on margin are standardized. This is in contrast to the spot forex market, which we learned about in our last course, where it is generally the broker that sets the margin requirements. A second difference is that is important to understand is that unlike in the forex market, where you do not pay anything extra when trading on margin, in the stock market, you pay interest on the money loaned to you by your broker, so there's an extra cost to trading on margin in the stock market. Now that we have that out of the way, the two most important terms to make sure you understand before trading stocks on margin are what are referred to as initial margin and maintenance margin. Initial margin is very simply the percentage of a stock's price that you are required to have in your account when purchasing that stock on margin. Regulations stipulate that the minimum margin an individual can trade on under normal conditions is 50%, although some brokers will require more. So, for example, if you were buying $10,000 worth of a particular stock, then you would be required to have at least $5,000 in your account in order to do so. If you had more than this, then this would be no problem, but if you had less than this, you could not purchase the stock. Maintenance margin, on the other hand, is the amount of money you are required to have in your account once the position is opened. Basically, there are two different margin requirements for opening and holding a position to give the trader room for a position to move against him or her once it's opened without having to put up additional funds. The minimum maintenance margin that a trader is required to have in order to hold an open position is 25%, although some brokers will require more. So, using our same example where the trader purchased $10,000 worth of stock, once the position is open, the trader will be required to have 25% of the current market value of the position in his or her account in order to continue holding the position. If the price did not move, then the trader would need at least $2,500 in his or her account in order to continue holding the position. If the position moved against the trader, however, and fell to a market value of $9,000, then the trader would need 0.25 times 9,000 or $2,250. Similarly, if the position moved in the trader's favor and moved up to a market value of $11,000, then the trader would need $2,750 in order to continue holding the position. If the trader falls below the minimum margin requirement, then the trader's broker will issue what is known as a margin call. A margin call requires the trader to either deposit additional funds into their account or sell some of the securities they hold in order to bring the cash in their account up to the minimum maintenance requirement. Depending on the market situation and the rules in a specific broker's margin agreement, the broker may also sell off a trader's position at their discretion once the margin call is issued. As you can see here, it is important that traders who use margin adhere to proper money management techniques so they can avoid a situation where they're issued a margin call and their broker sells off some or all of their positions at the broker's discretion. One last note on margin is that regulations require that a trader have at least $2,000 in their account in order to trade on margin. However, some brokers may require a higher level. That's our lesson for today. In our next lesson, we'll look at how to monitor your margin levels on the Thinkorswim platform, so I hope to see you in that lesson. As always, if there are any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.